The Georgia Department of Audits and Accounts provides independent, unbiased information and impactful recommendations to promote accountability and improve government. We have released a report on the Rural Hospital Tax Credit. We found that contributions totaled $79.2 million in 2025, and entities generally complied with state law. Rural hospitals face financial challenges because of issues such as population loss or many patients with either Medicaid or no insurance. Since 2010, 8 rural hospitals in Georgia have closed. The Rural Hospital Tax Credit, or RHTC, provides financial support to rural hospitals by allowing Georgia taxpayers to contribute to eligible hospitals and receive an income tax credit. The credit took effect in 2017. In 2025, 50 hospitals participated in the RHTC program, representing nearly 40% of Georgia hospitals. 2 state agencies administer the credit. The Department of Community Health enforces statutory requirements for rural hospitals, and the Department of Revenue enforces statutory requirements related to taxpayer credits. In addition, all eligible hospitals currently contract with Georgia Heart, a private third-party vendor that processes taxpayer contributions and provides other services. The Department of Revenue pre-approves taxpayers who wish to participate in the RHTC program. Limits vary for individuals and businesses. From 2017 to 2022, the annual credit limit was $60 million. The limit increased to $75 million in 2023 and to $100 million beginning in 2025. Contributions have been close to the limit in most years. In 2025, participating hospitals received $79.2 million. In 2024, hospitals spent $82.2 million in RHTC funds. A large proportion of the donations were spent on capital expenditures or regular operating expenses. At the end of 2024, 20 hospitals reported having unspent funds, which totaled $34 million. Unspent funds increased during the COVID-19 pandemic, largely due to projects being delayed. Unspent funds then began to level off before decreasing by 19% in 2024. There is no requirement to use funds within a certain time frame. All rural hospitals reported contributions and expenditures to DCH. Payments to Georgia Heart did not exceed 3% of contributions. DOR controls ensured that total contributions did not exceed the $100 million total annual credit limit or the $4 million limit for individual hospitals. State law requires DCH to approve a list of rural hospitals eligible to receive RHTC contributions. Of the 50 hospitals that received donations in 2025, DCH did not formally evaluate Blue Ridge Medical Center to ensure it met statutory requirements. This hospital received $2.25 million in designated contributions in 2025. DOR and Georgia Heart have implemented recommendations from our prior audits to address contribution errors. DOR updated its procedures to formalize the process for Georgia Heart, and Georgia Heart has continued to report discrepancies. DOR implemented a process to adjust excess credits claimed by corporations, and it has mostly adjusted excess credits claimed in tax year 2022. Identification of excess claims for tax year 2023 were delayed so DOR could update the process and transfer the review to its Audits division. We recommend that DCH formally evaluate all hospitals seeking to participate in the RHTC program to ensure they meet eligibility requirements established in state law. We also recommend that DOR continue to ensure controls regarding corporate credit limits are implemented appropriately and within the statute of limitations. You can learn more by reading the full report available on our website.